The American Transportation Research Institute, or ATRI, is a nonprofit organization. They do studies about the motor carriage industry, and they publish those results. They're used by industry stakeholders. They're used by DOT and FMCSA personnel as they consider what reforms or changes to enact, and are used by legislators, as they consider, proposed legislation, with our industry. So some of ATRI's research projects, things like which areas of the country have the most traffic bottlenecks, is CSA effective? Is it working as intended? What's the impact of proposed hours of service regulations on the industry? One they just released this week, just about 3 days ago, is tolls. What amount of revenues are collected by tolling of our highway systems? Where's that money go? And spoiler alert, about 50% of that money is directed away from highway and infrastructure needs. So as ATRI survey coming out this year that my industry is really excited about is what's the impact of nuclear verdicts? And a nuclear verdict, is a term that was coined a few years ago, but it's those jury awards that exceed tens of millions of dollars, or those jury awards that are completely out of proportion with the amount of damages. That's what's called a nuclear verdict. So my industry is really anxiously awaiting that report from ATRI. But one of the ATRI studies, ATRI does their studies sometimes once, sometimes they're repetitive studies. And one that they do every year is, I broke it, the operational costs of trucking. How much does it cost to operate a truck in today's roadways? And ATRI first published this study in 2008, and then every single year they do an update. So in 2019, this is the survey. It was 2018 operational costs. So basically, it's about 500 respondents, trucking companies, motor carriers, responding to ATRI and saying, here are our operational costs. And it's a pretty good cross-section of the industry: truckload, less than truckload, specialized carriers, probably a little underrepresented by the small segment. I think we heard that earlier today. More than 90% of the trucking businesses in the U.S. operate less than 10 power units. Okay, so, but this, the ATRI study is just a function of who responds to it. So about 21% of the respondents operated less than 25 power units, 50% less than 100. Roughly an equal mix, a third of who operates over what radius category. So here are the results. Except for tires, which remain flat between 2017 and 2018, each and every cost center measured by ATRI showed an increase. And if I roll this back to 2010, according to the ATRI survey results, in 2010, it cost about $1.55 per mile to operate a truck on U.S. roadways. In 2018, that cost had inflated to about $1.82 a mile. So the largest cost centers, driver wages and benefits, about 78 cents a mile, fuel costs, about 43 cents a mile, equipment costs, about 27 cents a mile, repair and maintenance, 17 cents, and rounding off the top 5, insurance costs at about 8 cents a mile. And truck insurance premiums had the second largest increase, in these operational costs between 2017 and 2018, at about 12% inflation. And if I roll this one back, in 2010, it was about 5.9 cents a mile for truck insurance. In 2018, about 8.4 cents a mile. So that's a 42% increase over that 8-year period of time. And remember, our survey is a little overrepresented by large carriers. And what do large carriers do? They have more cost control mechanisms available to them. They may decide to self-insure some of their physical damage coverages. They can use larger deductibles in their programs, whether liability deductibles or physical damage deductibles. And larger carriers sometimes look to alternative arrangements like captive programs and things like that. So they have more ability to control that cost. So I think that 42% is a good bit higher in most of the industry, the small segment, the guys who operate less than 25 power units. But, what's driven the 42% increase in insurance premiums? I mean, insurance premiums inflate. Most everything we look at, has inflation year to year. Costs go up through time. But the largest drivers for the insurance industry, one, vehicles cost more today. We're paying a lot more for our trucks and our tractors, so they cost more to repair. And all those trucks and tractors have a lot of new safety technologies, all of which is highly damageable in the event of an accident and costs a lot of repair dollars. So costs have gone up there for the insurance industry. And the largest, probably the single largest thing, has been the inflation in medical costs. So this is injuries after an accident when we have to, make reparation payments to an injured party. Okay. We used to be able to say in our industry, if we break somebody's leg in an auto accident, it'll cost on average about $25,000. Okay. Today we really don't know. The medical costs have gone up faster than anything else. So, and what are we doing today for injured parties? We have surgeries, but today we're doing repetitive surgeries. Sometimes there's 2-3 surgeries necessary, to repair that damaged leg. Then there's rehabilitations, physical therapies, which can extend for long periods of time. So that inflation in medical costs is one of the biggest cost drivers that the insurance industry's had to deal with. And over the last few years, we've had a pretty robust economy. That means we have more trucks on the road. The trucks we have on the road operate more miles. And there's more private passenger vehicles on the road. So all the increased traffic and interactions lead to more accidents. So accident frequency rates have gone up. That's been the driver in insurance rates. And what are we doing today? We're litigating a huge percentage of our accident involvements. All the billboards, if you've been injured in an accident, call my law firm. So we've gone from litigating a relatively small percentage of accidents over time to a period where we're litigating a very large percentage of our accident involvements. And one of the most important things in an insurance policy is defense costs, because your insurance carrier agrees not only to pay your liability claims, but to also defend you, from those court proceedings. And from an insurance company's point of view, sometimes we defend some really frivolous, not at fault events. There's allegations of damages and you're not at fault for that event, but insurance company can still lose when they win. They make no payments to the injured party, but there's a whole lot of expenses involved with attorneys and legal teams in mounting that defense. And the last, large thing that's driven the increase in insurance costs, the cost that the insurance industry faces, the jury awards have gotten higher. The out-of-court settlements, the amount of money we pay, after a claim involvement has increased. And this will be a little hard to see. Ignore the top, which is just premium growth. We know premiums have grown in the insurance industry. And ignore the bottom right, which is just projections, okay? But down here in the bottom left-hand corner, this shows the combined ratios for the commercial auto industry as a whole. The top's the private passenger industry, private passenger insurance, okay? But what we're here talking about today, what's in the middle right here, And I know this is hard to see, but this is the commercial auto insurance industry-wide rates, okay? And commercial, anything in red is above 100%. It means as a whole, the insurance industry is paying out more than $1 in liability claims for every dollar of premium income received. And the deep red's about 113%, paying out about $1.13 in liability for every $1 of premium income. Underneath that's physical damage. Those colors are a little better. Physical damage always performs a little better than liability. We're just repairing the damage to the vehicles. But you can see even that runs a little bit hot.
If you found this video useful, hit the like button and subscribe to our channel for more future videos that'll be coming out.